Alright guys, welcome to day 7 of my study arc. In my previous video, I actually covered some powerful chart patterns, double top, double bottom, head and shoulders, ascending and descending triangle, and both types of bull flags. So those are done. Today we are going to finish the rest, and I'm going to complete all the basic chart pattern types and like where to put the entries, where to put the stop loss, where to put the TP, just as before. So I'm going to do the same thing for you guys for the rest of the chart patterns as well. So grab your notebooks. Like I'm going to complete the chart patterns today. This is extremely important stuff. So I mean, if after today's lesson, you've basically known every single thing you need to know about chart patterns. So like it's extremely important for your trading journey. So let's get into it. Like I said before, I've covered bearish double top, bullish double top, bearish head and shoulders, bullish head and shoulders, bullish flag pattern, bearish flag pattern, and then I covered ascending triangle, descending triangle, and then yeah, that's it. So we covered 8 chart patterns for now. So today I'm gonna cover the rest. So first off, we'll start off with pennant patterns, and I'm going to do bullish pennant pattern, bearish pennant pattern, and symmetrical triangles as well, because these two means the same thing. Basically, it's the same thing. The difference is just these trend lines. I'll explain it later. So we'll get into the explanation. Okay, so like I was saying, symmetrical and pennant triangle patterns, those two actually means the same thing. The only difference is, I mean, these are trend lines. I'm just giving you as an example. These two are just trend lines, trend lines, trend lines. This is bearish and this is bullish. We'll talk about this later. First off, I will talk about the symmetrical chart pattern and the pennant chart pattern later. So in this case, symmetrical is basically it. You know what it means. Symmetrical. Basically, these two trend lines make a triangle. So this makes a triangle, and this basically this triangle is a symmetrical triangle, and it goes for the same for bullish and bearish both. It's gonna be the same thing. That's a no-brainer. But when it comes to pennant patterns, this two trend line does not make a symmetrical triangle. It does not. So basically this is symmetrical, this is not a symmetrical triangle. So it's a asymmetrical triangle. So I've drawn the chart patterns, the trend lines as well, and the market as well. So for you guys to understand, this is the bearish side. This is the bearish side of the symmetrical and the pennant chart pattern, and this is the bullish side of the symmetrical and the pennant chart patterns. So there's nothing for you guys to like confuse about. It's extremely simple. I'm just gonna divide it so you guys have a better understanding. There you go. So this is bullish, this side is bullish, and this side is bearish. So in these all these scenarios, the market is in a consolidation phase, making it tighter as the market decides its next move. So when we're talking about let's first off talk about the symmetrical, because the pennant pattern and the symmetrical pattern is going to be the same thing, same TP, same entry level, same SL. So I'll just choose one for you guys, because it's easy for you guys to understand, and you just go ahead and apply the same thing to if I'm gonna start with symmetrical, so just use the same principles and put it to pennant. It's gonna be the same thing. Okay, so as you guys can actually see, this is a bearish movement. So initially the market was in a downtrend and it respected the movement it made initially, and then it broke this trend line, the below trend line, it broke it over here, and then it did its retest, confirmed the retest, and then went on going in a downtrend. So basically, the TP levels and everything, it's extremely easy in this case because I have taught you guys how to use Fibonacci, and we are going to use Fibonacci retracement for like try to find the TP levels. So it's extremely easy. And always remember, if the initial market is actually coming from a downtrend, it's definitely gonna, like, there's a 68% chance of it actually respecting that initial movement, and it's gonna break this trend line over here and then continue being in a downtrend. But I've told you guys this earlier as well. There is a 68% chance of it going down, but there is a 32% chance of it actually breaking the above trend line, this top trend line, and going in a uptrend. But in this scenario, I'm not gonna talk about this 32% scenario, like the 32% chance of it actually going in an uptrend, because if that happens, just let it go, like, you don't have to chase a trade, just let it go. But in this, if we are actually talking about a downtrend, because this is actually bearish, and initially it was in a downtrend, and it made this symmetrical pattern, or else a pennant bearish pattern. And if it is actually visible that that the lower trend is broken from this point, and it came down a bit and then it just shifted up, then you guys need to know now, by now you guys need to be like 100% sure that it's gonna be going for the retest, and then it's gonna, at some point, it's gonna come down and hunt this low and continue going down. Now I will show you guys where to put the TPs, where to put the stop loss, where to put your entry. So this is going to be a short position, and we put our entry at this level, at this level. At this level. And then we keep our limit orders here and then wait for the retest, because this retest needs to come down and hunt this low, because when it hunts this low, our limit orders gets triggered. So basically we are in that trade, and now we have the clear idea of where to put the stop loss. We bring it to the retest level, to this retest high. So this is the SL, this is your entry, and now for the TP. Now, if I don't know whether you guys can remember, because I talked about Fibonacci, that I'm going to use Fibonacci levels to find the TP here. So as you guys can see, in this within this chart pattern, there are no, like, when you look at it, there are no high highs or low lows. Like, it's not respecting the initial downtrend. It's in its consolidation phase. So because of that, we are going to use Fibonacci. So as this is in a downtrend, always keep this in mind. We are going to use, now I've talked about Fibonacci levels earlier. I told you guys there are three crucial levels we need to talk about. So today we are going to use two of those. We are going to use the 0 level, and we are going to use the number 1 level. The blue line will come in handy. We'll talk about that in a bit. So first off, let's get the zero level. So zero level, we are going to put it within the chart pattern, within the pennant pattern, or within the symmetrical pattern. We are going to use it inside the consolidation, inside the chart pattern. We are going to use the zero level to the first high. In a bearish movement, in a bearish symmetrical pattern, or else a bearish pennant pattern, we are going to put the zero level using Fibonacci to the first high. So here's going to be your zero level, and we are going to drag the Fibonacci level to the starting low of the pattern. So first high is going to be our zero level, and then the starting low is going to be our number one level. So let's use the fib tool. So like I was saying, we're going to start from here, and then we're going to drag it out here. So as you guys can see, the zero level is here and number one level is here. Okay, now I have to zoom it out. Okay, just don't think about these stuff for now. Don't think about these stuff for now. Just focus on this blue line. Focus on this blue line. Now you guys know, like I was saying, I told you guys, let's talk about the blue line later. So let me explain it further. Now this blue line is gonna be your TP, because this is the maximum level. This trend is gonna be going down. If it respects this trend pattern and this downtrend, it's gonna go up to this blue line. So there you go. This is your entry. So you know where to put your entry, you know where to put your stop loss. Now there you go. This is the TP level. So it's gonna be the same thing. Let me just show you guys how to use it in the pennant pattern. So like I said, I did it in the symmetrical. Let's explain it a bit with the pennant pattern as well. Okay, so as you guys can see, there are two trend lines. This is not symmetrical, this is asymmetrical. And then it made this breakthrough. It broke this below trend line over here, and it went up for a retest and it came down. So when it goes up, we know where to put our entry. We are gonna put our limit orders here, and then once it confirms by breaking this low, we are going to bring our stop loss to that height, this high. And then, like I was explaining earlier, you get the Fibonacci levels and you put it to the first high in the pennant pattern. If it is bearish, you put it to the first high, and then you bring it to the initial low, the first low. And there you go. This blue level, this blue line is gonna be your TP level. So you bring it out to the blue line, and there you go. This is gonna be your TP. It's extremely simple. Like I said, it's gonna be the same thing for pennant pattern and for symmetrical. Both, it's gonna be the same principles. Okay, so we finished bearish symmetrical and pennant patterns. So let's talk about bullish symmetrical and pennant patterns. So it's extremely easy. It's going to be the same principles. There's nothing different. So as you guys can see, there are two trend lines over here. One is here, one is here. And once that, basically, if in a bullish symmetrical or pennant pattern, if the initial market is in an uptrend, it's most likely to respect its initial market movement and break the top trend line, break from here, and keep respecting the movement and goes up. So when that happens, let's zoom in a bit. So when that happens, by now you need to know extremely, like you need to be 100% sure where to put the entry levels, where to put the TPs, where to put your stop losses, because I've taught you guys hundred of times where to get the entries, where to put your limit orders, where to put the stop loss, how to get your TPs. So in this scenario is going to be the same principles. We are going to use Fibonacci levels to get the TP, but the entries and stop loss is going to be the same. So let's get into it. So in this scenario, it's going to be a long position. So once it breaks this trend line, the top trend line from here, and it goes for its retest, now you guys need to have a good understanding where to put your limit orders. So you get it, you put your limit orders here. Now you wait, I mean, you put a limit order here, so you're not in the trade right now. Once the market hunts this high, so it goes for the retest, it goes and it hunts this high. Now the limit order is triggered, you're in the trade. Then you guys need to have a clear view to where to put the stop loss. The stop loss is gonna be here to this retest level. And then we are going to talk about the TP levels. Like I said, now in this scenario, we are going to use Fibonacci retracement tool as well. And let me show you guys, like let me explain it where to put the 0 level and the number 1 level. So in this case, I'll just draw it out first. As you guys can see, there is the 0 level. This is going to be the 0 level, and the other one with the gray markings is the number 1 level. So in this case, we are going to put the 0 level is going to be at the first, in this it's like I said, this is in a consolidation phase. This is a different trend. It's going to be sideways. So in this sideways scenario, we are going to put the number 1 level to the first low it makes inside the pattern. It can be symmetrical, it can be pennant, but we always put the 0 level. The 0 level is going to be the first low. This is going to be a 0, and then we are going to drag the Fibonacci level and put the number 1 level to the first high. This is going to be your levels. So let me use the actual chart, actual Fibonacci tool. So we put it here. We put the 0 level to the first low, and then you drag it out, put the number 1 level to the first high it makes. Now we are going to drag out the TP levels to the blue level. There you go. This is your TP. That's it. That's the total concept of how to get the TP. It's extremely easy. All what you have to need to, like, all what you need to know is how to draw the Fibonacci retracement and always wait for the retest. Those are the two crucial points you need to know in symmetrical and pennant pattern types. It can be bearish, it can be bullish. In both chart pattern types, it's going to be the same principles. So like I said before, it's going to be the same thing for the pennant pattern as well. I'm not going to bore you with the same drawing, so it's going to be the same. Always put the entry here, always put the entry here. It's going to be the SL should be at the retest point, and then you put the Fibonacci level to the first low and bring it up to the first high, and then you drag this TP level to the blue line. There you go. It's extremely easy. There's nothing for you guys to get confused of. And then we'll go and talk about, and then let's go to the live chart. So let me show you guys some live examples. And when you look at it first, you cannot identify anything. Let me show you guys the chart pattern. So basically this is a bearish pattern, and when you draw it like this, there you go. This is a pennant pattern, bearish pennant pattern. The market initially came as a downtrend. It was in a consolidation phase. It broke the lower trend line, gave its retest, and then it kept on going down. So let me show you guys how to get the TP levels. And there you go. You put the 0 level of the Fibonacci retracement to the first high, and then you drag it out to the initial of the first low, and there you go. This is going to be your TP. This blue line is going to be your TP. And then let me show you some other examples. And there you go. There's another example for a symmetrical triangle pattern. This is a bearish pattern. And then, like I said, so basically it broke this trend line, lower trend line, and it went for a retest. It was not a clean retest. It went further up, and then eventually it broke this low. And then if we need to get the TP levels, we are going to put the 0 level to the first high, and then we are going to drag the number 1 level to the first low, and then there you go. This is going to be our TP level. So let me show you guys with the actual short position. So the TP is the limit order is going to be here because it broke the level and it went for a retest. And we are going to, after it hunts this, we are going to bring the stop loss to that low, to that high, sorry. And then the TP, we are going to drag it out until the blue line. So this is going to be our trade. Like I said, it's extremely easy. If you find this pattern, go for it, wait for a retest, and then it's a solid setup. You can actually earn a lot of money with this trade. See, it actually respected that stop loss. It did not hunt it. It went down straight away to the blue line. Okay, now let's talk about the rising wedge pattern. So basically this is going to be this is the basic idea of rising wedge. There's nothing new to it. It's this pattern always get into head when a lot of guys know by now that a rising wedge is it's going to be in this slanted position. But as you guys can see, there are two trend lines. So these two trend lines cannot be a straight line. It should always be slanted. It should always be slanted. Always keep that in mind, because if it was a straight line, if one of these trend line is actually a straight line, that's going to be a different type of a pattern. So we're talking about rising wedge pattern. So in a rising wedge, it's going to be slanted, but at the top, at the very end, it's going to be a closed up pattern. So it's going to be closed up. It's not going to be a open pattern. It's going to be a closed up pattern. So a rising wedge pattern happens in a market when the market is being overbought, because the market is in an overbought position. It makes this kind of chart pattern So for retail traders can actually get in on a good solid short trade. So like when the market is in a overbought level, a lot of traders, I mean, you guys should know this by now, it's gonna definitely go down at some point because a chart cannot always be going in an uptrend. So this is a good indicator, indicator that shows that the market's gonna go down. And then let me show you guys where to put the stop loss, where to put the TPs, where to put the entries. So like any other chart pattern, if it is going up and it's making a rising wedge pattern, eventually it will break this lower trend line, this lower trend line, this lower trend line from here. And then like any other chart pattern, we are going to wait for the retest, we're going to put our limit orders here, and then once it breaks this low, we are in the trade, and the stop loss is going to be to this high. And then I will show you guys where to put the TPs, because this TP is gonna be different. So first off, let me show you guys for an example. Let me show you how to this is a rising wedge, so this is a short position, so we are going to put the short position here. So as you guys can see, it went for a retest, so we are going to bring our stop loss to this high, and then for the TP in this chart pattern type, the TP cannot be a single level. The TP cannot be a single level. Always keep that in mind. There are going to be multiple TP levels. But let me show you where to get the TP levels. So as you guys can see, in this chart pattern, it keeps on making higher lows, these lows, these lows, these lows. I mean, we are going for a short trade. Just keep that in mind. We are going for a short trade, and these levels are extremely crucial for our TPs. So in this example of rising wedge, in this chart, there are 3 lows, 1, 2, and 3. So that means we are going to use those 3 levels as our TPs. Okay, so the first TP is going to be this is going to be our TP level number 1, and then this is going to be our TP level number 2, and this level is going to be our TP level number 3. Okay, now let me explain how to use these levels. So for this part, let's change the color so you guys can actually understand. So for this level, for this number 1 level, once the market comes to this level, you just book 25% of that trade. 25% of that trade. And then because the market can actually come up to here and just reverse and goes up, okay, so it's easier for us to, it's actually we can protect our positions by using this method. So just book 25% of the profits from here, from the number 1 level, and once it hunts this low, you are gonna book from the initial TP, you're gonna book 50% of that trade, and then when it goes and hunts this 3rd level, if there are only 3 levels, just go for 100%. If not, if there's another level, if there are 4 levels, just go for 75% and go for the 100% for the 4th one. I hope you guys actually understood what I'm trying to say. Just there are multiple levels of TPs in this rising wedge pattern, as well as the falling wedge as well. It's going to be the same for all the wedge patterns. So like I said, to this level it's going to be 25, and book 50% from number 2. And if there are only numbers, like if there are only 3 levels, three lows, book 100% by the end of it, or else just book 75 and go for the fourth by with 100%. Okay, so just always keep in mind, it's not going to be a just single level of a TP. It's going to be multiple levels. Keep that in mind. And it's going to be the same for the falling wedge as well. So like I was saying, for falling wedge is going to be the same as the rising wedge. We wait for the breakout, and then we put our limit orders here, we put the stop loss here, and then for the TPs it's going to be this. So this is the TP level 1, TP2, TP3. So in this case it's going to be a long position. We're going to put our limit orders here, and once it goes for the retest and hunts this high, we're going to bring our stop loss towards the retest, and we are going to drag out 100% of the TP to the last level, the number 3 level. So as you guys can see, there are 3 touch points. We are going to go for the last one. So this is going to be our TP. We are going to just leave it over there because the market might actually go there. So we keep it there, and then mark out these. Always keep it in mind, just book partial profits. So 25 from here, maybe from the initial, from this level, from the total point, just maybe book 50% from here, or 75 from here. If you want to just experiment a bit, just bring your stop loss and keep it to the entry point and see how the market's going to play out. So there's no risk. Just keep that in mind. It's extremely easy. Just it's going to be extremely easy when you guys go into the charts. Just keep in mind every single thing I told you. I might have not just written it down. Just listen to what I have to say. Always keep in mind, it's going to be extremely easy. Just bring your stop loss to the entry point, so there's no risk of you losing money. You have already booked 25, you have booked 50%, or you have booked 75%, and just see how the market's going to play out. So there you go. This is an example for rising wedge pattern in Solana. Like I said, it actually respected these two trend lines, and it broke it from here, and it went for a retest. And then, like I said, always wait for the retest confirmation. So you're going to put your limit orders here, and after it's confirmed, you bring your TPs here, the stop loss here, and then we're going to book partially. So you book once it is here, you book some profits, and then once it is here, you book another set of profits. So after this, I mean, like I said, there are only two touch points. So after it goes here, just be experimental, bring your stop loss to the entry level, so there's no risk. Plus you've actually earned a lot of profits because you booked partially from these two levels, and see how it plays out. See, it just went all the way down. Like I said, it works. You need to be extremely cautious when you're using retail trading. So this is a clear example that you can make millions out of it. So now we are going to talk about the expanding triangle pattern, or else sometimes people call it the broadening pattern. But The only difference between this and the previous one is at these ends, these are actually in these wedge patterns, these ends come closer. This also, it comes closer, but in the expanding triangle patterns, it does not come closer, it just broadens, like it gets bigger. So that is the only difference. It's extremely simple, there's nothing much to it. So when it's bearish uh, or bullish, in both scenarios, like always, there's going to be two main trend lines which the market actually respects. So in a bearish expanding triangle pattern, if the market is in a uptrend and it makes this kind of pattern, then you need to get a good idea that it's going to be bearish at the end of it. So just be mindful, always be careful, because there are chances that it actually goes respecting the initial trend. So always be extremely cautious, always wait for a breakout and always wait for a confirmation. Even if it breaks out, sometimes it just fakes it gives a fake out and just keeps on going up. So always wait for a confirmation. So let's talk about the bearish first, so you guys get a good idea first about bearish. And then, so the initially, like I was saying, the market was in an uptrend and it makes in a high highs and high lows, and at some point eventually it broke the lower trend. So this is broken, and now if you just be extremely patient and wait carefully to see what's gonna happen in the market. Okay, sometimes these kind of patterns give a retest, sometimes it doesn't. So always keep in mind, if there is no retest, do not get in on that trade. You're gonna lose money because there's no clear point for you guys to put the stop loss. Just it's extremely simple, that do not rush into trades. So like I said, clearly there's a retest here. So put the entry, put the limit orders here, and after it is confirmed, after this low is hunted by the market, you know where to bring your stop loss. So this is going to be a short position, you're going to put it over here, and then, so once it is confirmed, once the limit order is triggered, you bring the stop loss here. Then for the TP, it's going to be the same scenario as before. There is no one level, there only partial closes. So let's say if the retest is given, like let's say it goes for a retest somewhere over here. Now as you guys can see, it has passed the first level of our usual TPs. First level of TP is already passed by the retest. Just nothing to worry about, just let it go. You don't have to worry about it, because there are these levels as well, this is going to be 2, this is going to be 3. So once the market comes here, just before we did 25% from here, from the first level, we did another 25% from the second level, and we need another 25% from the third level. So just, it's fine, it's going to be more profits, because you're going to do a higher percentage for the second, because you have already missed the first one. Okay, so there's nothing much to it, just close partially, there's nothing much to it, just close partially, do not panic. um, because at some point, I mean, as you guys can see, this market is going in a downtrend from for some time, because it's going to be somewhere over here. It's not going to start, this downtrend is not going to start from somewhere over here, it's going to start from here. So at some point it's just going to go down and might turn from here, or else from here, or else somewhere from here. So that's why I always tell you, just book some profits. It's easy, so you guys have some profits in your account. Plus there is no risk once this once your first TP is done, you're going to bring your stop loss to the break even point. You bring the break even point to here. Even if the market goes south, even if the market goes in an uptrend, it changes its direction, you're not losing any money. And then let's talk about the bullish expanding triangle pattern. So like I said, it's going to be in a expanding formation. It's not going to be close, it's going to be in an expanding formation. And like I was saying earlier, this is a bullish formation pattern. So at some point it's going to break this top trend line over here, so as you guys can see, it has broken the trend line from here, and it went for a retest, and then it hunted that high, went further up. So let's get the long position. We put our limit orders here, and for the SL we wait for the confirmation, and then we bring that stop loss to the retest point, and for the TP we bring it up over here, and then we close partially. So this is 1, this is 2, this is 3. So from each and all these levels we are gonna close partial profits. Just what I do is I close 25% each from these levels. So I mean, you can guys like actually go for it. I mean, if you want, if you're 100% sure that it's gonna go to level number 3, hold it. Once the number 1 level is hunted by the trend, bring your stop loss to the break even point, so you're extremely sure that you're not going to lose any money. So yeah, that's the basic idea of a bullish expanding triangle pattern. So let's go to the live markets. I'll show you guys some live examples. And there you go. This is a good example for Ethereum for a expanding triangle pattern. So this is going to be a bullish, bearish example. So as you guys can see, it actually went for a retest. It went for a retest and it came down. And let's look for another example. And there you go. There's another example for a bullish triangle pattern, expanding triangle pattern. I mean, like I said, it's not extremely accurate. So I personally do not. I try my best to avoid these patterns because, like I said, it's not extremely 100% sure that it's going to keep on going up. So as you guys can see, it just went up a bit and then it's just went straight away down. But it hunted these highs, like I said, it hunted these levels. So if you booked your profits somewhere over here, and you booked somewhere your profits somewhere over here, then you've actually made some money. And then lastly, let's talk about the triple top and triple bottom chart pattern. I basically I feel like I've already taught you guys half of it, not half, basically all of it. It's just we talk about the same chart pattern types earlier. It's called double top and double bottom. It's going to be the same thing, but it just an extra bounce. There's nothing much to it. Use the same principles and use the same SL, use the same TP. Is gonna be like, it's gonna be the same thing. I'll show you guys. Just like the double bottom, the triple bottom is gonna be the same. So basically, in a bottom, if it makes 3 bottoms, 3 touch points in a trend, it's considered as a triple bottom. So basically, where you get the entries, I'll show you guys clearly. If it makes a triple bottom, it's going to be an uptrend. So it's going to be a long position. We put it over here, and then once it confirms this by hunting this high, once it confirms the retest, we bring the stop loss to the retest point. And you basically, I mean, what I do is I get this length and just keep it to the breaking point and bring the stop loss, the TP here. Or else what you could do is get Fibonacci levels. If it is a straight trend line, get your Fibonacci retracement, put it to one of these lows and put it to one of these highs, then you have a idea of where the blue line is. Just bring it to the blue line. That's how it is. There's nothing much to it. I've already um, explained it earlier with the double top and double bottom. It's going to be the same thing. Like I said, it's just another bounce. It's just this an extra touch point. And for the triple top, as you guys can see, it's going to be a short position. You bring the stop loss once it is confirmed. Once the trend is confirmed by hunting this low, you bring the stop loss to this high, and for the TP, or else you could just calculate the length of this one of these highs and just put it to the breaking point, or else just use the Fibonacci retracement, put it to this one of these highs, put it to this low, and then you have a clear idea where to put the TP levels until this blue line. Okay, so that's it for now, and that's it. You've basically covered all the chart patterns you need to know about retail trading, and there's a lot more out there. Like there's a lot more different chart patterns out there. Just I've taught you guys the basic stuff. Like I don't want to overload you guys with like additional stuff. It's basically a lot of people just combine one or two chart patterns and just call it a new just give it a new name. So like I don't want to, like I said, I don't want to overload you guys. You might get all this into your head and just confuse yourself and then start losing money. I don't want that to happen. I want you guys to succeed in trading as well. So yeah, like I said, basic stuff is given to you. Always do your back testing. Always practice, because practice makes you perfect in retail trading, because retail trading is not 100% accurate. So the more practice you have, the more successful you will become. So go back, review day 1 to day 7 and practice spotting these patterns on live charts. It's not going to be clean as the sketches I showed you, so just go and practice. And the more you train your eyes, the more the easier it becomes for you guys to identify the chart patterns. And that's it for day 7. We've basically completed the entire chart pattern section. um, Make sure you like, subscribe, and drop a comment if you actually need me to explain another chart pattern type which you are actually struggling with. I will get into it. Maybe like I will drop a short video or something like that. So just comment and share it with your friends if you have trading friends, or if you want to actually get people into trading, just share this video with them. And I'll see you tomorrow with the day 8. So we'll be talking about some deeper stuff in day 8. See you.